Everyone doing this morning? Welcome to the room. You guys hear me okay? Everything good? I know sometimes we get audio problems off the get-go. I want to make sure that everyone can hear me. Can you give me a Y if you can hear me in the room? And then we'll get going, guys. We'll have some fun today. Nobody? Yes? Somebody? Thank you for that. I get nervous. All right, guys. So we're going to do it. We're going to have some fun today. What are we going to do today? We are going to talk about patterns that repeat themselves. I'm going to give you a plan to trade said patterns. I'm going to give you anything and everything that you could ever hope for to be successful. And then I'm going to open up the room for you for feedback on everything that you do, everything that you see, everything that you wonder. So should be a lot of fun today, I think. Remember, just a reminder, if you don't really want feedback, if you just want to show off, that's cool. Let me tell you right now, it's okay. If all you want to do is say, hey, look at this winner, this was awesome, right? I don't need feedback. Just congratulate me or something like that on your chart. Otherwise, I'm going to go back and I'm going to talk about advantages and disadvantages and stuff like that. And I don't want anyone's feelings getting hurt when I tell you that your trade was lucky. So make sure that if you post in the room that you're open to the feedback that's coming. And if you disagree with it, I certainly welcome that. But if it's unorthodox, if it's a little outside of the normal, do me a favor, write your rules on there. Tell me why you did what you did. Otherwise, I just guess, and when I guess, it typically goes to conservatives. So anyway, had to get that off my chest. Wanted to put that in the room. We're going to get going, guys. We're going to check news. There was a little one, May 2nd at 7:30. There was low impact. 8:30, we had a little high impact. And then, guys, we're pretty much smooth sailing for the rest of the day. Not a lot going on. As far as news, good. I'm not going to fill up my gas tank till tomorrow, Sergio. You know, it's amazing. And this is funny. I was playing golf yesterday and this old man goes, man, can you believe the markets are going down? This is such bad news. And I said, sir, I trade futures. I'll just go short. I don't care if crude's at 80 or 20 or 10. It doesn't matter. As long as it's going up and down, there's an opportunity for us to make money. It's a different mindset, without a doubt, if you've been a stock trader in the future. Go into forexfactory.com. It allows me to understand when news is released. It allows me to understand when there may be an emotional response to said news. So every morning I come and I check the news and I'm like, okay, at 8:30 where there's unemployment claims, it might make things go a little crazy. I'm going to go refill my coffee. Hey, good morning, Roku. I'm going to go do something other than throw myself in front of that freight train. Nothing else going on for the rest of the day. We'll see more tomorrow, but we're going to go to the education page and we're going to talk about stuff and we're going to talk about rules and we're going to look for advantages. And everything that you need is here in this page, guys. Everything. Good morning, Andy. Good morning, JW. JW, we're naming a trade after you. I've decided. Andy caught it perfect this morning or yesterday. So we're going to call it the JW trade, the same way we have the Ron C trade. There are no secrets with Nexgen, guys. There is no, let me give you a little bit and charge you more so that you can have a complete thought. It's literally everything that you need to be successful. And I think of the software. A software is a tool. And you have to learn how to use the tool. And that's the purpose of this room, is to teach you how to use your indicators, how to read your indicators, how to recognize advantages, and then ultimately how to get in the market when you see these advantages. So all the advantages are listed in the tutorial section. All of the rules for the trades we teach are listed in the tutorial section. There's an awful lot in here, but for the sake of this classroom is designed to get you guys that are brand new, to get you people that are really kind of learning what it is that the software is telling you. Guys, this is a classroom designed to help you learn to read your charts, to help you learn to read your indicators, to teach you how to use these tools that you very fortunately have stumbled upon. And chart reading is like 90% of what we do every day. Chart reading is just you looking at your screen and saying, okay, here's my advantages. and here's my disadvantages, and are my rules met? And for the brand new user, we're going to identify all of the advantages. We are going to talk about the other side of the coin. So for every advantage, there's a look that associates with it that is the disadvantage, the opposite of the good thing. And you guys are going to learn how to piece these together to turn them into what we call a high probability trend trade. And a high probability trend trade is a trade that typically wins 70 to 80% of the time. It's a trade that really does create an awful lot of confidence, because every time you win, guys, it feels good. Every time you win, you begin to trust. Every time profits are realized, it's this little dopamine kick. It's euphoric. It really is. But the idea is that we're going to get you getting that dopamine kick, good morning, Muser, from the correct trades, from the trades that are high probability, from the trades that offer a statistical advantage, from the patterns that repeat themselves over and over in the market so that you can do the same thing all the time. And I know that sounds a little mundane, maybe a little boring. Oh, I have to take the same darn trades over and over. Well, guys, if they're winning more than they lose, why wouldn't you? Trading is not designed to be your adrenaline fix for the day. Go find something exciting else to do, right? But let trading be your business. And you would never run your business based on emotion, hoping for profits, right? You would be mechanical. You would have a trading or a business plan, a business model. You would have budgets. You would have constraints. All these things that keep you in line so that you can be profitable. And trading can be the exact same way. Once you're good at reading your charts, once you feel confident with your indicator reading, you're going to understand where the market is likely to continue, where it's likely to go, and where it's likely to stop. And these very three concepts are going to be the basis of everything you do, to be honest, because you'll understand where the market is likely to continue, and this will become entry points for you looking at that high probability trend trade. Where the market is likely to go becomes a wonderful spot to take profits. And where the market is likely to stop is this advantage that Nexgen users have. It's this giant red flag waving, saying, hey, the market may stop here. Don't take any more trades into this area. It's literally like seeing a brick wall and then making the choice not to walk headfirst into it. So we're going to focus on the high probability trend trade. It's not a difficult trade, to be honest with you. There's not a lot that goes on with it, but it's this trade that's going to teach you to read your charts. And your chart reading is what's going to take you to your entry precision. And then once you're in at the right spot, there's really nothing left to do to manage it. But it all stems back to being able to read your charts, being able to take that information and make a decision about whether or not, good morning, Cindy, it's time to take a trade. This class hasn't really changed in years because there's just no reason for it to. We're going to talk about, there we go, the rules. Guys, we're going to talk about the trigger line of Fibonacci rules for when it's okay to trade. You're allowed to simulate, to go in, break some eggs, practice, try things, make mistakes. The goal is that you don't practice the wrong trades, because while winning and getting lucky feels good, it's rarely a long-term solution to profits. It's a short-term victory, and very often getting lucky in the market, fighting everything but still getting paid, it's creating bad habits. So we try to avoid that in the very beginning, try to get that muscle memory where it needs to be. We do that through simplicity. A lot of simplicity, guys. The most intricate, detailed simplicity that you will ever find. Just kidding. We're going to break it down to 2 trades. That's it. Just 2 trades. Keeping it simple. Giving ourselves the advantage every time we get in the market. But you've got to understand what you're looking for. You've got to understand what the looks are. That's where, for the new user, this classroom comes into play. This classroom is designed to break down each part, each advantage into its own individual piece so that you can put them together to create a trade. The easiest way to get to where you want to be, the fastest way to becoming a confident trader ASAP, is posting in the room, guys. Posting in the room. Tell me everything that you see, right? Tell me why you did what you did. Tell me what made you feel like you needed to be in the market right there. Show me where you got in. Tell me where you got out. And this is pretty cool because this is Ron saying essentially, He waits for the divergences, the weakening, the weakening. This one's a little aggressive, even by your standards, Ron. And then once the small triggers roll, he starts to look for short little hits. Ron's been posting in the room for the last year and a half, right? I think it was a year in October. So it's been a while. And I'm very familiar with the way he trades now. And these still give me heartburn. And you're going to find out why when we talk about advantages. But what happens is Ron's doing the same thing over and over. And he'll post in the room. And it's a huge favor to me, I feel like, because he's showing you guys what's capable once you become a chart reader. And I think that I lost my mouse. The possibilities are endless once you get these advantages down. The opportunities are just, you can't count them because there's so many once you can read your charts. And you're going to see people taking trades that are outside of the high probability trend trade. You're going to see people taking trades that don't fit your rules. You're going to see people fighting momentum. You're going to see people going against the trend. And I don't want you to put yourself in a position of being the trade police, because what happens is these people that are taking these trades that don't make any sense to you have gone through the exact same process that I'm asking newer users to go through now, to post in the room, to ask a lot of questions, to begin to recognize patterns, and you'll find the patterns that are comfortable to you. And then the second thing is using the spreadsheet that Nexgen gives you. I give it to you guys every day because I update it almost every day. This spreadsheet just helps create recognition through repetition, guys. The more pictures you take and put in the spreadsheet, whether it's entries, management, patterns that repeat themselves, termination conditions, this is how you get to where you want to be, seeing the same darn thing over and over. The same way in this classroom, I sound like a broken record. I say the same thing every day. Look for momentum. Look for a clear path. Look for an entry area. And the first tab is it's trade tracking sheet, guys. Even the CME, like if you go to the CME's website and you say, what do I do as a new trader? The first thing they tell you is track everything so that you can get your progress, so that you can know exactly what it is that you're looking for, so that you can see if you're repeating mistakes, if you're repeating things that are making life good for you. And that's what this first page does, guys. Go through, fill it out every time you take a trade. But most importantly, and let's do this right here, come back and study it. Pictures don't work if you don't look at them a second time. Pictures don't work if you don't annotate your charts. If all you do is snap a picture because Mark said take a picture and then you never look at it again, well, then your pictures don't do any good, right? They're gone. They're lost in space. So every time you take a picture, make sure that you annotate, share your chart read, everything that you see, everything that you thought, where you get in, where you got out, why you did it. And what you'll be able to do is you'll be able to come back the next day and just ask yourself the easy questions. What worked, right? What did I do yesterday that worked well? I'm going to try and do it again today. And on that same token, you're going to ask yourself, well, what didn't work? Maybe I can go in today with this clarity that that's not my trade, that that's not what I'm looking for, because I want to do the things that worked. I want to repeat that. What felt easy typically corresponds with following rules and having advantages, and what feels forced is when you know you're breaking it, but you take the trade anyway. And what you'll find is if you find yourself moving stops rapidly, if you find yourself adjusting entries to weird spots, if you find yourself sweating and nervous, you probably broke your rules and you know it. And it's weird how you will be able to self-police a lot by going back and looking at these things, recognizing the patterns that bring you success and then recognizing the patterns that don't. And the coolest thing about it is that not only will you recognize patterns in the market that aren't bringing you success, you're going to recognize patterns in yourself. You're going to recognize patterns in you. Maybe you have a thing, and most people have a thing. My thing was trading into termination conditions, trading into areas that were likely to stop the market. And I'm going to tell you guys, I did it religiously every day for a long time until I finally posted into my brother's classroom and he recognized that pattern in me. And what he did, Cindy, I knew that was coming. But what he did is he finally said, and these were his exact words, guys, Mark, how many times are you going to trade into one of these lines expecting it to break? And I was like, oh, wait a minute. And it clicked, and it took a while for it to click. He goes, go back and look, Mark. Go back and look at how many times these key Fibonacci areas stop the market, reverse it, create bounces. Why are you hoping that they break? Why don't you just let them break? And man, it changed my trading. And it was just that little outside look at what I was doing that really helped me fix that problem. And going back and studying my trades reinforced that rule, and I began to see the patterns. So, guys, that's your path. Show me everything. Um, Use that spreadsheet, fill it up. I mean, fill it up. Make sure that you're thorough on your reads. Um, and Cindy, I'm gonna talk about that for a second. Taking pictures feels like work, and if you say to yourself, "No, I'm gonna follow the path," taking pictures feels like work. I know it feels like work. Guys, I've been a new trader. I've been new to the software. But I'm telling you that that's the work that pays the highest dividends. The more pictures you take, the more clarity you have. The more times you write the same stupid thing on a chart over and over again, the easier it becomes. And guys, this is a few months old and I'm already up to like 1,800 pictures in it. But the more time you spend writing, these are my advantages, this is what it looks like, the easier it is to recognize those advantages. So make sure that you're not skipping that. Make sure you go back and study those pictures. And if you're not where you want to be yet, back up a little bit. Let's look at the high probability trend trade, not because this is the only trade you'll ever take, but because this is the trade that teaches you to read your indicators. This is the trade that gives you that advantage of becoming a chart reader. And your high probability trend trade is only 3 rules. And we start with this trade for a reason. Absolutely, Paul. We start with this for a reason because when you understand this trade, and guys, this is a trade that if you really focus on it, you'll really have it down within a week or two. I believe that wholeheartedly. And if you don't have it down within a week or two, there's a good chance you're not really doing the work, or you don't have a concept and you're not asking for help. And that's the biggest thing. Some of you guys will work your asses off, but you'll never ask for help. So you assume that the lessons you teach yourself are always correct. But this high probability trend trade, guys, it's 3 rules. That's it. It's strong triggers, no termination conditions. That was my problem. And then finding an entry. Each one of these rules creates an advantage, guys. When you have strong triggers, you have the advantage of momentum. When you have no termination conditions, none of those likely to stop areas, you have a clear path. And once you have those, you're going to find an entry. You're going to use rule number 3 to give you the best of the best spot where the market is likely to continue. I did too, Paul. I did too. That's one of the reasons why I love teaching this class. Is because you guys present these mistakes that you think are so unique to you. And I made them. I made them years ago. And I made them lots. And I figured out how to correct them. And it's fun to be able to share that with you guys. These 3 rules are going to come into play on only 2 charts. That's it. Are there more charts? Absolutely. Are there different time frames? For sure. But the reality is, guys, if you keep it simple in the beginning and you focus on 3 simple rules on only 2 charts, you're going to walk away from that head held high, feeling like a chart reader. We all do, Paul, because we're all egomaniacs. It's part of being human. Your large chart, ladies and gentlemen, is a broad stroke of a brush. And everything that you need to know initially is going to be found in the most current bar on the large chart. You will be able to define the direction of the market on the most current bar. If the background is green, it's going up. If it's red, it's going down. How easy is that? You'll be able to understand whether or not you have that first advantage of momentum, whether or not those strong triggers are present. And you'll also know whether or not you have a clear path. And I'm going to give you the recipe for all of these. And when you have them, and only when you have them, will you look at a smaller, faster chart, a refinement chart. Guys, this takes that broad stroke of a brush. It takes that 1 bar's worth of information, and what it does is your small chart allows it to break down into about 15 to 30 bars typically. And you'll be able to take 1 bar and see the inner workings of it, so to speak. And you'll be able to pinpoint the best of the best spot, that point where the market is most likely to continue. That's not a silly question at all, Cisco. Let's do it. So are you on Capture, Cisco, or are you on Snagit? I'm going to open up my Capture too, because the process is really the same. But why not turn this into a lesson for all my new folks too? All right, so you're Snagit, so we'll do Snagit, but Capture's the same, guys. Capture and Snagit are the same tools. This one has bells and whistles. This one doesn't. So if I click Capture, remember, guys, that we're trading two charts. So you always want to show me two charts. You want to show me timestamps. You want to show me price bars. You want to show me the most current information. Once you release it, it comes up and it gives you this. And do all your annotations, right? On this one bar, there's 15 to 30 bars. It allows me to refine all this good stuff. And then you're gonna share the link. It's gonna give you that screencast address. Once you have that screencast address, so Cisco, if you right click and just paste, it's going to give you the screencast address right here. So let's turn this into a full-blown lesson. What do you say? And get you guys some pictures in case you need it. So the first thing, whoop, can't see that. The first thing that you're going to do, and I'm going to put a 1 on it, is paste your link into the sheet. And once it's there, that was the wrong picture. Let me bring that down a little bit and get a better one, because I need the top. Once that link is in the sheet, Cisco, you're going to do this. You're going to, so 1 is paste. I'm going to make something so that you guys have a little cheat sheet. Paste link into the sheet. The second thing to do is going to be click on Insert tab. And then the third thing to do is going to be click on the link. And this is what gets you to that hyperlink, guys. This is what makes it so that you can turn that link, that screencast address into one of these easily readable hyperlinks. So here's the first 3. So you're going to do that. And then once you do that, once you click on this link button, it's going to set you up for the hyperlink. So the fourth thing you're going to do is you're going to paste into the address bar, paste the address into the address bar, just like you're going to Google or something. And then under text to display, this is the last thing you'll do, is describe it. Describe the picture so you know exactly what you're looking for. And let me give you that one as well. So if you need the link after the fact, all right. Great questions. And guys, these are the important ones, right? This is setting you up with how to study. So after the fact, let me open up a web browser. If I go to screencast.com, oops, and I sign in, what you get is you get all the stuff that you've uploaded. So every time you upload something, it's going to show up in here. If it's from Capture, you have that one. Oh no, don't update. If it's from Snagit, stop it. If it's from Snagit, it shows up here. Look at, I've got pictures from like 2 years ago. Man, I feel like I did something wrong. So once I come to one of these, there's the one from 4 minutes ago. Cisco, what you can do is if you click on the arrow, it'll get you that shareable link. So you can come through and you can click on that for all of them and go get the link, so you can come back and do it after the fact as well. Does that help a little bit? I hope. And then this lets you, like if it's a Snagit file, let's go to the oldest first. Mine go back 2 years. That's kind of cool. And then if it's a video, you got a couple of videos. If it's all your images, you can go back. That's when I first set up my new one, was October 2022. And you can set them up like this if you want. So go play with it. If you have questions, let me know. But that's how you're going to go back and you're going to get it, so that you can retrieve old pictures and come back, and you can just go back and study them too. I don't know, Andy. No, that's okay. And Cisco, this is what the classroom is for, and I can't stress this enough. This classroom is for every question that you have, whether it's about the rules, whether it's about using the software, whether it's about using a spreadsheet. And some trades take 15 to develop, easy peasy. That's true, Andy. Some trades take longer. What you can do is you could actually, Andy, you could start a video right when you enter, right? And talk yourself through everything that you're doing. You'll be amazed at the stuff that you say if you're breaking rules. You'll hear the word but 1,000 times. I know because I've done it. But when we talk about high probability trend trades, let's get back. Yeah, man, he told me to do that. He goes, just record a video of your trades. We'll do it today. We'll do one today. If something sets up, we'll record it, and we'll go through and we'll have fun with it. And you'll be, even if we don't record it, if you guys ever seen me trade live in front of you, I talk about the advantages nonstop. I talk about what's going on the chart nonstop. And that's what you're going to do as a trader. Is you're gonna say to yourself, is there momentum? Is a clear path? Do I have an entry area? Are my rules met? And you're going to talk yourself through the process. What's changed? What's different? And the more you speak to yourself, and the more you speak to yourself in terms of advantages, the more in tune you're going to feel with your market. So let's build that foundation with the high probability trend trade. Let's talk about the 3 rules. There is strong triggers on the large chart. There are no termination conditions on the large chart. And then there is entry rules for the small chart. So everything begins on the large chart. The large chart leads the way. I want you guys to go to Etsy and find a coffee cup that says that. Large chart leads the way. And the most important thing that we can do with the large chart, guys, is never fight it. So if the background is green, the market's going up, let's only look for our rules to be met for high probability trend trades long initially. And if the background is red, the market's going down, let's just look to go short, right? Instead of fighting that momentum. When the background is green, strong triggers. Rule number 1 means that your small triggers are above the large triggers. Both triggers are green and wide in the angle and the direction of the trend. Flat triggers do not offer momentum. Flat triggers are lifeless. It's like a deflated balloon. So I want to see them opening like shark jaws, right? And it's the space between the two that lets me know that the odds are favorable for the market to continue up. In a downtrend, just flip the chart, turn it red. Small triggers below the large triggers. The large triggers are wide, everything is angled down, dive bomber. And it's the space between the small and large, guys. It's that gap between the two that lets me know that the odds are favorable for the market to continue down. Odds favorable momentum, strong triggers. Guys, it's the same look. Whether it's the large chart or the small chart, whether it's a range chart or a tick chart or a Renko chart, it doesn't matter. The trigger lines don't know what market they're trading. They don't know what time frame it is. But when you have that space, you have strong triggers. Strong triggers make the market push in the direction of the trend. Strong triggers can break those key Fibonacci areas on the large chart. And strong triggers, God bless them, will cover a lot of the mistakes that we make as new users. Because it's hard to stop momentum on a large chart. So strong triggers lead the way, guys. Strong triggers are the first advantage that you're going to give yourself. Strong triggers really aren't difficult to recognize, and I want you to see this. When the smalls are above the large are wide, everything is going up. That is the best of the best time to buy Fibonacci support on a smaller, faster chart. It's going to look like a tail on a large chart. We don't trade those tails. We use that refinement process. But as you go back and study this odds favorable momentum, you'll begin to see these tails circle them and we'll go look for entries. We'll see if they happen. Sometimes the tails are long, sometimes they're short, but small's below the large are wide, that space between the two, and look how it finished the move all the way down to Fibonacci support. And if you just scroll back, this is the S&P. Sometimes the colors don't match up. I don't have momentum. Sometimes the large triggers are lifeless. I don't have momentum. But sometimes they're absolutely wide, angled in the direction of the trend, and I keep seeing these tails. I keep seeing these little pullbacks. Sometimes they're green and going up, but the smalls are on the wrong side of the large. So guys, you want to go back and you want to take pictures of strong triggers and you want to see these tails and you want to begin to develop trust that when the market has this level of momentum, it more than often or more than not pushes in the direction of the trend. Is everybody cool with the first look? Is everybody all right with this look for strong triggers? We're going to see these tails on there. That was a pullback on a smaller, faster chart, guys. This leads the way. And if strong triggers create the advantage of odds favorable momentum, when those small triggers return inside of the large triggers, we call this a weakening of the large triggers. This is a visual representation of the slowdown of the trend, guys. And when I have weak triggers, anything can happen up or down. I'm a huge fan of words. I believe language is important, especially in the learning process. So if you get to the point you ask yourself, I have $100 in my pocket, I have to take a trade. And I have two choices. I have odds favorable, where I'm more likely to win if I go with the trend and the momentum, or I have anything to happen where it becomes a little bit of a crapshoot. Where are you going to spend your $100, guys? Where are you going to be willing to risk it? Most of you are going to say odds favorable momentum, I hope. And that's the best of the best for new users. This is when we're going to sell Fibonacci resistance on a smaller, faster chart. This is the brand new user. Right there. That's your best of the best. But as you grow with the software, you're going to see more opportunities. And then you're going to see when one line gets inside of the large triggers, this is your second opportunity. This is the slowing of momentum. Visually, you can see it slow down. And you're going to have to incorporate a little bit of chart reading. Make sure everything is okay if you're looking to take that short trade, because the advantage of momentum is no longer present. It's not overwhelming. It's not odds favorable. And then when you get those weak triggers, those anything can happen triggers, guys, it's okay, brand new users, to say this isn't my trade. As you begin to mature with the software, you become comfortable with some patterns and advantages, you may find yourself taking short trades, but you'll have the ability through your chart reading to manage them aggressive. And this is your best. That's kind of giving it away, and that's where it's gone, guys. And it really can be that simple with trigger lines. When your weak triggers hit an area, and you're going to see these areas on your chart all day long, when you hit them with weak triggers, those areas are likely to hold. They're more likely to stop the market. That's kind of the segue to rule number 2. Recognizing those spots that have the potential to stop the market, guys. We call them termination conditions. Termination conditions happen on the large chart primarily. Termination conditions are nothing more really than lines on the large chart that have the potential to stop the market. And those lines that we're looking for are going to be divergence highs and divergence lows. They're going to be red Fibonacci resistance or blue Fibonacci support, yellow 1-to-1s. All of these areas have the potential to stop the market. All of these areas can create an untradeable bounce. All of these areas are where decisions are made by the people that control the market. Even the robots, the algorithms, recognize these areas, and they're accurate. It's crazy. If you scroll back and look at them, it's amazing how you can see these areas long before you get to them. And then with a little bit of help from your trigger lines, you will understand whether or not they are likely to stop the market. That's your termination condition. That is the big red flag, no more trades into the area. Whether or not they have the potential to break, that's the one where you're going to rely on a little bit of chart reading, and maybe you'll take a shot if it's perfect, and then you'll also understand if they've broken, and that's your green flag. That is the one that says, man, let's look for rules to be met, and let's trade with the trend, and let's trade with the momentum, and let's trade with that clear path and look for opportunities, because that's where the statistical advantage lies. But you've got to understand the very basic recipe first, and it never changes. And I've got to say this: the recipe never changes for termination conditions on the large chart. It always begins with price reaching the area. Price reaches the area. Those dynamic Renko bars hit a fib. They hit yellow 1-to-1s. They hit a divergence higher, divergence low line. That sets the decision-making process in motion, guys. So if the sellers are in control and they keep pushing, and they hit Fibonacci support, there's a couple things that may happen. All of your sellers may jump ship. That might have been their target, in which case that opens the doors for the buyers, and that's where you see those big pushes in the other direction. Some of the sellers may jump ship. Some buyers may enter. And sometimes you'll see this indecision at these key areas. You'll see a fight in the market. So if price reaches the area and the triggers do not get below, no trades into that area. This is an area that may stop the market. And because it may stop the market, your advantage of a clear path is gone. And with that advantage of a clear path gone, you are no longer in a high probability scenario. So you're going to see it all day long, guys. You're going to see price reach a divergence high. If the triggers remain below, there's nobody in this room that should feel compelled to break that, to try to trade into it as a brand new user, because it may stop the market. If it reaches resistance, the triggers remain below, even with odds favorable momentum, it may stop the market. The same thing about the 1-to-1s, guys. If it reaches it, the triggers are below, it may stop the market. You'll notice that a divergence printed, that magenta line printed. You see one print here as well, guys. Price doesn't reach the line that comes off of a pivot. Price actually creates it right down around the third bar. It's when price comes back to the line is already formed and it's reached, then that becomes a termination condition. You'll see them at lows as well. Yellow 1-to-1s, no triggers break through, and look at that, it pushes right back to resistance. All the triggers are below it. That's like the double termination. This is the don't get caught in consolidation or the fight look. They come back to those yellow 1-to-1s. All the triggers remain above, and now they're weak. Remember we said weak triggers more likely to turn, and sure enough it turns. Strong triggers into support, it still bounces. Not a termination, just a pivot with a loss of momentum, and then when price reaches it and the triggers are above, it becomes a termination condition, guys, and that may stop the market. So price reaches the area, none of the triggers break, no short trades. Is everybody okay with that one? That's really the beginning. And look at this, live market as we speak. Price reaches Fibonacci support. Into the freaking tick, it started that push up. How amazing is that? Even with strong triggers, support creates the bounce. Resistance stops the market cold, pushes it back down to support. Resistance stops it, support stops it. Man, these fibs are unfreaking believable. All you have to do is study it a little bit so that you can develop the trust. Scroll back, look at them, and what you'll find is that you begin to believe in wholeheartedly the idea that when you reach an area that may stop the market, your absolute best of the best thing to do is absolutely nothing. So there's three options for you new users. There's price reaches, no triggers, no trade. That's rule number 2 not met. And if your rules aren't met, it's easier just to not take a trade. Well, these areas are considered broken when both the small triggers and the large triggers get to the other side. This is your clear path. This is when there's nothing for the market to bounce off of in front of you. Smalls and large break resistance. Resistance begins to behave as support. And until you reach the next area, your path is clear. Until you hit the next line, your path is clear. Let's just look for rules to be met for our trades. And then we come into the third scenario, and this is, I want you guys to give yourself 20 days to learn to read your charts before you try to really jump into this one. When the small triggers break through resistance, and they break through it assertively with odds favorable momentum 3 to 4 points beyond, this fib has the potential to break. This Fibonacci area is not broken until both the small and large get through. So even if it turns blue, it's not broken until the large trigger's clear. Even with the momentum, it's not broken until the large trigger's clear. So this is an area with the potential to break, but it's not broken. And if it's not broken, rule number 2 isn't met. But this is going to be one of those looks with momentum that there still may be opportunities to enter the market. There may be the opportunity to take what we call a medium probability trade. This one is lovingly referred to as a 50-50 trade. 50% of my triggers are through, 50% are not. I'm going to hand you guys the most effective way to take this trade. Gary can't hear me. 1 second, guys. We'll see if we can get him squared away. And I'm going to take a quick look over here and let me see. Turn off the microphone, deafen, user settings, voice and video. Yeah, I'm just not sure how that works. But guys, if you ever have tech questions, you can't hear me. I always say reboot, right? I always suggest a reboot first. And then if that doesn't work, go to tech. We have the best tech guy in the world. Jason is freaking phenomenal. And there's really not much that he can't fix. So you guys can hear me, right? It's not just Gary. I just want to make sure. But if you ever can't hear me, make sure you tell me, and then you'll see people start posting Ys in the room, and that's me asking to make sure that everybody can hear, actually. So are we good? Price reaches an area. If the triggers don't break, if it's one of these divergence lines, it's a termination. Guys, your advantage goes away. Let's talk about the pivot stop out real quick. This is misunderstood a lot. If price goes down and goes up, we call that a pivot. It's just a pivot. Market goes down and then it goes up, and it seemingly turns from nowhere. If there's a loss of momentum right there, if momentum, and we'll make momentum a different color. If momentum doesn't follow price, you're going to see this blue line print. That lets you know that there was a loss of momentum, guys. Divergence is a loss of momentum. That's all it is. Divergence isn't a guarantee of a reversal. Divergence isn't some catastrophic failure that you should be fearful of. Divergence is nothing more than a loss of momentum. And guys, honestly, all this does is it has us say, hey, look, there's a loss of momentum. But it's when price returns to the divergence line. You guys know the recipe, right? Price reaches an area. Where are my trigger lines? If the trigger lines remain above, well, now that divergence line is a termination condition. If price exceeds it a little bit, then trades back above, it's what we call a pivot stop out. This can happen at a low or a high. If price trades above a divergence high and then back below, it's a pivot stop out, no more long trades. If price trades below a divergence low, then back above, it's a pivot stop out, no more short trades. And it really is pretty simple like that, guys. And it's very, very clear, and it's right here in the user guide. You see it at lows. Pivot stop outs, no more short trades. You see it at highs, pivot stop out, no more long trades. So these pivot stop outs are termination conditions, and they can be strong. They become even stronger when they coincide with Fibonacci resistance or support. So don't overcomplicate divergence, but when it becomes a termination condition, when it becomes a pivot stop out, give it the respect that's due. And I had an awesome question yesterday from a user. He goes, the divergence lines don't seem as solid as a fib. And I love that. And I'm going to tell you guys right now, when we talk about the lines on a chart, when I talk about fibs, mid bands, yellow 1-to-1s, when I talk about divergence highs and lows, I don't rank them. One isn't better than the other. A fib from a 5-1 chart is not stronger than one on a 21 chart, or a 13-2 is a great question. I don't rank them. If your line is on this picture, right? If you have any of these lines and price reaches them and the triggers don't break, guess what? It's a termination condition. So thank you, you person that asked that yesterday privately. What a great lesson for everybody. Lines can stop the market. Trigger lines let you know whether or not they're likely to stop the market. In this case, guys, the sellers took over and they pushed hard enough to smash through Fibonacci support. And when they reached these yellow 1-to-1s, everybody in my room, all of my amazing pupils said, hey, the triggers are above. Don't take a short trade. You don't have a clear path. And every one of you held on to your money, and it was pretty outstanding. And I was proud of each and every one of you because you chose to not break your rules. You said, I no longer have a clear path. Let me do absolutely nothing. And great work, everybody. Is everybody comfortable with why there's no reason to go short there if you're following rules for the high probability trend trade? From the 1-to-1s, it pushes all the way back up to resistance and all the triggers remain below. So the recipe for a termination condition is met both ways. And guys, this is where you start to see all these different things happening. I can't go short, and then I can't go long, and I'm still not going short into the termination. And you'll notice that the triggers don't match, that one is green, one is red. I don't even have rule number 1 met anymore. I don't even have momentum. And it runs all the way up, and I still don't have momentum, and I still don't have a clear path. And it pushes down, and I'm not going short. And it pushes all the way up to the mid-band. And I want you guys to notice that the large triggers are a full bar away. This lets me know that the mid-band is likely to stop the market, that it's behaving as a termination condition. And sure enough, it does. It stops it, and it pushes it down. And then everything begins to move up. All of these white arrows, this is your 90%, ladies and gentlemen. This is where the disciplined trader does nothing because the rules aren't met. This is where the rules-based trader does nothing because they don't have a statistical advantage. Their rules aren't met. Guys, this is where you could either give up $1,000 in opinions or you could lose absolutely nothing. You might be a little bored, but you're not giving money away without the advantages. And then eventually, you end up with rule number 1 met because the smalls are outside of the large. And you end up with rule number 2 met because all the triggers are above resistance and it's now behaving as support. And you end up with rule number 3 met that we're about to talk about because you get a pullback to an area inside of favorable large triggers. And guys, this is your 10%. This is where it's easy. This is where the advantages are in place. This is where if you're just a little patient, these become the effortless trades. These become the trades that are the easiest to catch, that have the highest probability of winning. These are the trades that build accounts. All of this nonsense where the advantages aren't present, guys, this is where people lose money. This is where people blow out accounts. This was a 45-minute span. I've watched people blow through two or three different accounts within an hour, within that 45 minutes, hoping that the market does what they want it to do, when all they had to do was wait for it to actually give the rules met. And it was the euphoric feeling of suicide. Right before you pass away, you have this calm. And I think that's what Ron was referring to. You're just giving it away. You're making it a choice to end your financial freedom right there. So, guys, it's okay to do nothing when there's nothing to do. It's okay to sit on your hands when your rules aren't met. And this is one of the things that I see is more traders. All of you guys end up catching this trade, but it's the money that you don't give away. It's the money that you don't sacrifice to the market when your rules aren't met. It's the poor trades that you avoid that typically result in that positive equity at the end of the day. So is everybody cool with the idea that lines on the large chart can stop the market? Lines on the large chart behave as termination conditions. Lines on the large chart are where we can identify these key points. And that's important for the next lesson. Because lines on the large chart can create problems. Well, lines on the small chart, guys, we're going to use these for entries. And that's one of the reasons that we use the two different charts. Because on the large chart, we can identify problems before we ever reach to them. And on the small chart, we'll use those lines for entries. But there is one termination condition, one time on a small chart where rule number 2 isn't met. There's one time on a small chart where I will no longer take short or long trades because my clear path has gone away. And that's when 3 divergences print in the same price range. 3 losses of momentum. 1 divergence, guys, who cares, right? It's just a loss of momentum. 3 divergences is the market losing momentum over and over, and 3 is the magic number. When I see 3 in the same price range, it may terminate the trend, whether it is short or long. And it becomes more powerful if you incorporate that lesson from rule number 1. If you go from odds favorable to that anything can happen look, it makes those 3 divergences more powerful. And they become even more powerful if your third divergence is higher than the second. This is a head and shoulders pattern. Or if your third divergence is lower than the second. And guys, that adds strength. So 3 on its own can stop a trend. 3 divergences with weak triggers becomes more powerful, and 3 divergences with that head and shoulders is more powerful still. So you'll use this look on a small chart to help you identify the change that you can't see happening on that large, slow-moving large chart. So 3 divergences in the same price range, well, it may terminate the trend. It takes away my advantage of a clear path. And once again, let's go to the large chart here and look at the bounce off of fibs. Even if they break, you could see the reaction. And I think we went through on the ES. So let's see if we can take crude oil and see if the rules seem to repeat themselves on a different market. Directly into support with odds favorable momentum. And look how the market pushed directly to resistance with no triggers through. And guys, here's a pretty cool phenomenon, and you don't see it that often, is this loss of momentum printed and created a line all the way across. And I want you to see something. The market stopped on the absolute tick. To the absolute tick. It didn't create a pivot stop out. It was just a termination condition. But if you don't think that these divergence lines are important, look at that, to the tick. Resistance, no triggers, and it pushes down. There's your pivot stop out. Look at the push up. There's an area that didn't break, and the market pushes down. No triggers through, starts it up. Pivot stop out, the market goes down. Guys, these termination conditions, they happen all the time. Your easy money, your highest probability chance of success happens in between them. It happens when you trade from them rather than into them. And man, I mean, that was, a lot of you will recognize that, and you will in just a moment. On the small chart, that looks like the perfect entry. But your large chart said don't take it. Your large chart said the path wasn't clear. And you're going to be able to figure these out. You're going to be able to look at your charts and understand that your advantages come from, first, the large chart, the advantage of momentum. The large chart says whether or not you have a clear path. And all of it happens on the most current bar. Are you guys good? Should we go look for entries? When the large chart says momentum and a clear path, when the first 2 rules are met, when those advantages are in place, you're going to go to a smaller, faster chart. You're going to go to a refinement chart. And you're going to be able to go to rule number 3, which says on the small chart, you're going to be able to use a limit order to buy or sell a pullback at an area inside of favorable large triggers, guys. It's a very, you need a deep breath to say it. I'm going to use a limit order. That means that I'm literally going to wait for the market to come to me. I don't even have to chase it. I know exactly where this market is most likely to continue, and they're going to have to come to me if I'm going to enter there. I'm going to put that limit order at areas, fibs, midbands, yellow 1-to-1s. The same way that I waited for areas on the large chart to show me there was a problem, I'm going to use areas on the small chart to define the point where the market is most likely to bounce. And that most likely to bounce area is when it's inside of triggers, guys, when it's inside what I call favorable large triggers. And favorable large triggers mean that your large triggers on the small chart and your synthetic triggers, they're just more large triggers taken from a higher time frame, when they overlap These triggers are where I expect price to return. That's it. It's a correction point. But the second that I stick fibs, mid-bands, yellow one-to-ones inside of that correction point, I give the market something solid to bounce off of. And I want you guys to think of these entries as like throwing a tennis ball as hard as you can. And you don't expect it to bounce 2 feet in front of the wall, right? And sometimes the trigger lines are in front of the wall. You expect it to bounce off the wall. You moved, I don't know what that means. We expect the market to ricochet off of areas, fibs, mid-bands, yellow one-to-ones. When those areas are inside of those triggers, not only do we define where the market is likely to return, but we also give it something to bounce off of. So favorable large triggers, these two trigger lines are like snakes riding piggyback. And when you have that best of the best look, you have the smallest correction point. Paul, I can't see your picture, but should have is not necessarily right. It's exit because of rules. And we'll look at your picture before it's all over. But guys, I want you to see this. When those trigger lines begin to split, when they begin to separate, when they begin to break away from one another, what you do is you create two correction points, right? The triggers are where I expect price to correct to come back to return to. The second the trigger lines split, I have doubled the correction points. I have increased the distance between them, and I really create a lot of indecision. It decreases my accuracy dramatically. So for the brand new users, this is your best look. As you grow with the software, you may take a shot with the split triggers, but I'm going to tell you right now, I see a lot of losers on split triggers because it just takes away the precision. And we are good at what we do. We are very precise on finding entries. But it all starts with the rules being met on the large chart. It all starts with odds favorable momentum and a clear path for the brand new user. When that happens, let's go to my picture real quick. I don't think I've shared this one yet. The large chart is the large crowd. It's the people in charge. It's the people moving the market, the people that react to areas, the people that create the trends, the people that establish the momentum. The large chart leads the way. The large crowd leads the way, guys. You can make the choice to never fight them. Your rules are designed to keep you from never fighting them. Your small chart is the small crowd. These are the guys with some cash in their wallets, but maybe not enough to beat the large crowd. Every now and then they will. Every now and then you find a ringer. But the small crowd forces that pullback, that little retracement. The small crowd gives just enough shove for you guys to take advantage. So when the large crowd says down, when the large crowd says momentum, when the large crowd hasn't reached an area, we wait for the small crowd to do their thing. And that begins with the reversal bar. The reversal bar signals the beginning of the pullback. And remember, your rules say that you're going to buy or sell a pullback at an area inside of favorable large triggers. This is how the pullback starts. Once that pullback begins, let's find our triggers. Are they wide? Are they angled in the direction of the trend? Hopefully they're one on top of the other. And you can draw a box from the lowest point of the triggers to the highest point of the triggers. That's like a 22 tick range. That's not where our trade comes from. Our trade doesn't come from the reversal bar. The high probability trend trade does not come from impacting the triggers. We have to find the areas within. We have to find the bounce point, the fibs, the mid bands, the yellow one-to-ones. And once you locate them, you're going to create a window of opportunity. And for a short trade, it will extend from the lowest point of resistance inside of favorable large triggers, the area closest to price, and that window will extend all the way to the highest point of resistance inside of favorable large triggers. Fibs, mid-bands, yellow one-to-ones, guys, and this is the point where the market is most likely to continue. This is the area where we expect to see a bounce to go with momentum, to go with that direction. And the cool thing is you're going to be so comfortable and confident with that look eventually. Sorry, I'm messing things up here. That you will literally activate a limit order. at the bottom of that window, at the lowest point of resistance, a tick or two below it, and you're going to say, you know what, small crowd, come get me. I have the advantage of momentum. There's nothing in my way. I've identified where I expect you guys to be able to push to. Why don't you come on up and fill that order? And if they do, guys, you're in a high probability trend trade. You're in a trade that typically wins 70 to 80% of the time. You're in a trade that creates an enormous amount of confidence through the memory of success. And you're in the trade that just taught you to be a chart reader. This is the trade that has you recognizing odds favorable momentum, that creates your awareness of when you have or have not reached a problematic area. This is also a trade that, because you understand termination conditions, it's going to create the ability to recognize what we call strong tops and bottoms. And a strong top or bottom is when you get one of those termination conditions that none of the trigger lines broke through the fib and it reverses the market, guys. And a strong top or bottom is the most advantageous visualization of decisions being made so strong by the opposing force that they reverse the market and created momentum. When you have a strong top or bottom, guys, it sets you up for success the other direction. It gives you the highest advantage. So with everything up, right, from a termination, odds favorable, haven't reached the fib, and I just start looking at my small chart and I'm like, man, I sure hope the small crowd shows up. And if that reversal bar shows up, man, here we go. Let's start the process. Once I see a reversal bar, let me find my trigger lines. And I'm looking for those triggers from the top line to the bottom line. Whether it is synthetic on top of large or large on top of synthetic, it doesn't matter. The highest line of those triggers to the lowest line, this is where I'm going to start looking for my areas. And my areas extend from the highest point to the lowest point inside of triggers, and that's my window of opportunity. I have clearly defined exactly where the market is most likely to continue, and because I've done that, the only thing left for me to do is to activate a limit order just above that highest point of support, and that's where you're going to wait, you're going to hope, you're going to wish, you're going to pray the small crowd gets there, because there's nothing else you can do, guys. The only thing you will ever be in charge of is whether or not your rules are met. The only thing you can ever control is whether or not you have momentum, a clear path, in an entry area. Everything else in trading is up to the market. Everything else in trading is up to the people that move the market. But what happens is when these three come together, guys, you've taken a trade that typically does this, that typically goes to your profit targets, that typically gives you that statistical advantage, that recognition of where the market is most likely to bounce, coupling it with momentum, coupling it with a clear path. And guys, if you take 20 days to learn how to recognize this window of opportunity, this best of the best, you're going to be a chart reader. You're going to understand momentum, and you're going to understand termination conditions, and you're going to understand where the market is most likely to continue, which means that you're also going to understand where the market shouldn't go. And this is going to help you with stop placement. But you have to remember that it's a two-chart process and that the large chart leads the way. And with momentum and a clear path, we don't trade tails. We use these tails as a study tool to go back historically, to circle them. And if it lines up with support inside of favorable large triggers, I know that my rules are met for a trade. I know that I have a high probability trend trade. I understand fully that everything is exactly like I would have wanted it to be if I were watching the market live. So I take this picture and I go to my spreadsheet, guys, and I go to my favorite looks tab and I drop that link in there. And I say to myself, don't miss this trade. Perfect long trade. This is the bee's knees. Whatever I need to let me know that this is the plan that I'm looking for, that this is the trade that I want, that this is where all of my advantages come together. And I want to be able to recognize this and take this with the utmost trust and confidence, because this is a trade that typically wins 70 to 80% of the time. Is everybody good with that? All we're talking about for the first hour every day is being able to recognize where the market is most likely to continue through three very simple advantages. Whether it is a long trade or a short trade, the rules don't change. It's looking for the reversal bar, identifying your triggers and the line within, and this becomes your window of opportunity. Learning to ignore the areas beyond. because they're beyond the correction point, beyond where we expect it to go. And you're going to use that very simple concept for your initial stop placement, guys. If you can figure out where the market is most likely to continue through a very simple 3-rule recipe, you understand where the market shouldn't go. Because if it pushes beyond that window of opportunity, you've lost your edge. And when you've lost your edge, why on earth do you still want to be in that trade? You have to be willing to take a loss when things don't work out. And it's okay. You're going to take losses. You will lose trades. If you take the high probability trend trade 10 times, you should expect to lose 3 of them. 70 to 80%, guys, mathematically obligated. If you take it 100 times, you should be ready to lose 30 of them. And you don't get to pick which 30, which means that you have to develop trust in the entry and take it every time. And don't grade your trading on one trade. Grade it on a sample. Take 20 trades with the exact same look and see how often it wins and decide whether or not you have an advantage. The cool thing is that with all those advantages in place, more often than not, you're going to get a reversal bar in the direction of your trade. It doesn't guarantee a win, but at least the market reacted. The buyers tried, the sellers tried. You can move your stop 2 ticks below it. And what this does for the Nexgen user is because of the precision on our entries, even the trades that don't work, we have the opportunity to lose minimal, to maybe give away 40 or 50 instead of 250, 300, right? Instead of wishing that the market would go up, instead of hoping the market goes up, we simply say, it's not doing what it's supposed to do, what it does more often than it doesn't. Let me take a small loss and wait for my rules to be met again. And guys, that's the high probability trend trade. That is the absolute best of the best. That is the precursor to all of the other trades that you're going to take, because this is the trade that gets you focused on advantages. And if you speak to yourself, I have these advantages or I don't have these advantages, it's going to put you in a great position to find all the other trades that present themselves to the chart readers out there. So are there any questions about the high probability trend trade, guys? Is anyone unclear on momentum? Is the recipe for terminations escaping anybody? Is finding your window of opportunity, guys? Is there anybody that needs a little help with that? Because all of these things are the foundation. And once you create the foundation, life gets easy, guys. So I'm going to give you this chart reading 101. I'm about to give you guys all the gifts I have, everything that you need to be successful. This chart reading 101, guys, this turns you into a chart reader. In order to get to where you want to be, you have to recognize some pretty simple looks and then piece them together to create a trade. And you have to be able to recognize them quickly. And the more you study the looks when the market isn't moving, the easier it becomes to see it when it's live. So I challenge everybody in this room, take 25 pictures of each. Strong triggers, weak triggers, clear path, termination condition. Commit them to memory. Go back to your spreadsheet and fill these up, guys. Rules met, rules met, rules met. And then the opposite is rules not met, right? So as much as I want to know what it looks like to have strong triggers, to understand when that advantage is present, it's imperative that I also understand when the triggers are weak, when that advantage is gone, when it's taking away the advantage of momentum. And you don't want to just take pictures, guys. You want to annotate your charts. You want to talk about the whys. You want to describe the looks that create strong triggers. You want to describe the recipe that is establishing that termination condition. And when you do this, this is about 245 pictures, guys. This is about 4 hours worth of homework. You'll be floored at how easy it is to recognize momentum at the drop of a hat, how easy it is to not trade into termination conditions because you've gone back and seen it 25 times and you've watched the market bounce 25 times off that area. Annotation is the key, guys, because when you type it out, your brain associates words with a look, and the words are your rules. And you begin to develop trust. You begin to get this confidence in the ideas. And then taking those and then creating a trade from advantages, not creating trades from a desire. So that's going to go in the room for you in a second. And that's what's going to get you to the KISS plan, guys, your stepping stone in your learning journey. This plan is designed to optimize your chances of success with the high probability trend trade and that 50-50, that one area not broken trade. Simulation study, class feedback, continuous practice. You're going to create your own plan. I want you to create your own plan. I get excited about you guys creating your own plans. But your plans come from your ability to read the indicators. The more time you spend seeing the very easy stuff, the more patterns you're going to recognize without even looking for them. And your simple plan starts with don't fight the large chart, guys. Don't fight momentum. Don't fight areas. Don't fight direction. Just go with the flow. Define your entry for the high probability trend trade. Nobody has ever followed this checklist to the letter and done worse than 70%. Nobody in the history of it has ever said, you know what, Mark, I was struggling, so I went back to the high probability trend trade and I only won 30% of them with all the rules met. Everybody has told me it's typically closer to like 85, 87. I say 70 to 80 because you know what? Let's keep it low. We're going to make mistakes. So use this checklist when you're getting into the market. Use this checklist to police yourself. Did you have the advantages in place? And as you're learning, make sure that you know what these look like. What is a termination condition that reverses the market, that strong top or bottom? What does odds favorable look like? You can also use this as you go back and take pictures to fill your spreadsheet. What do weak triggers look like? What's a termination condition look like? What's a clear path look like? How do I define my window of opportunity? Where does my entry go? Guys, everything that you need to be successful is in these pictures. Everything that you need is in this plan. Everything that you need is right there set up for you to be able to optimize your chances of success with a high probability trend trade. And then once you're in, you have to manage it. You have to do something with that great entry. So the same way it's mechanical to get in, guys, initially for you guys, I've created a mechanical plan that is 100% if then, without opinion or emotion, just really following some very simple rules. If I get in at the area where the market is most likely to continue, then my stop goes where the market shouldn't go. And I'm not going to touch that stop. I'm either going to let it get hit or I'm going to get a reversal bar. And if I get a reversal bar, if, right, there's my if, then I will move my stop 2 ticks above it or 2 ticks below if it's a long. And then I won't touch my stop. It's either going to get me for a smaller loss or it's going to hit my first target. And if it hits my first target, well, then that's $100 in my pocket. I feel confident, I feel comfortable, there's money in the bank, and I'm going to move my stop break even. And then I'm either going to get stopped out break even or it's going to go to my second target. And my second target's only $200 in the distance. So if I take the most advantageous entry, if I use the most mechanical stop, and everything does what it typically does, I'm $300 richer, guys. And $300 a day is pretty outstanding. That's a $72,000 year. And there's not a lot of people that wouldn't welcome an extra $72,000 in their bank account every year. So I always encourage new users, keep it simple initially. Allow it to be easy. Define your entries. Learn to speak in terms of advantages. And then what happens from there is you start seeing more opportunities. You start finding more trades, and you can create your own plan that's based on your experience reading the indicators. You can adjust your management plan based on your experience reading the indicators. You can begin to learn to trust odds favorable. You can begin to learn to trust that clear path and really holding for bigger moves, turning those $300 trades into $500 trades. But everything begins with your ability to recognize advantages, to be able to speak to yourself in terms of advantages, to keep it simple until you have the ability to go outside of that simplicity. So I'm going to take these three, four, is it going in? Man, Discord's giving me fits right now. Give me 1 second. I'm going to do the old Discord kill. I don't think it's going to kill you guys in the room. And you may actually even still be able to hear me as I reboot it. But I'm going to get this back going, and we're going to try to get into this education room. Hopefully you guys can hear me. But every now and then Discord gets a little wonky and it doesn't let me do what I need to do. Can you guys hear me okay? Is everybody good? It looks like my microphone is on. Just want to make sure. Cool. And now Paul's pictures are showing up. I was just getting blurry ones earlier. So guys, keep it simple initially. Keep it focused initially. There is the chart reading 101. There is the KISS plan. There is the high probability trend trade checklist. There is the checklist with pictures. There's here's my spreadsheet again, just to make sure that you guys have it. And then finally, guys, here's the PowerPoint that I use to teach class every morning. Everything that you need to be successful was just dropped into the room. This is the greatest, most high-tech treadmill that you could ever buy. But if you don't get on it and use it and learn how to use it properly, if you just hang laundry on it, you're not going to hit your goals. So, guys, learn how to swing the hammer. Learn how to use the tool. Ask a million questions. Post a million pictures. Share 1,000 charts. Make sure that you tell me what your read is. Don't just post in here, guys. If you need attaboys, I give them all day long. I celebrate every victory. But if I feel like you got lucky, I'm going to tell you you got lucky. If you gave away so many advantages, I'm going to identify every one of them. And every chart that I read, even the ones coming from you veterans that don't have annotations, I'm going to say something like, all right, you had a 50-50 look from a bad top, right? And you had a momentum style trade, even though the small triggers are right up against the large. You took it from the best spot and you managed to get paid. And you knew that this wasn't the best of the best trade. And then it turned into one of those 50-50 trades. And while you took it from the area it triggers, you didn't realize that the small triggers were working their way inside of the large, which means that there was a loss of momentum, which means that it may overrun. And then, Paul, I'm inclined to tell you that this is gold, and gold overruns all the freaking time. And if it's not perfect here, man, you've got to find some way in gold to eliminate that overrun from the plan. How do you bypass it? Do you wait for a reversal bar? Do you wait for a close on the correct side of the small triggers? I don't know what the answer is. I don't trade gold because gold overruns more than it doesn't. And that's the one thing that I know that's true. So Paul's been with me forever, right? And Paul says that's a termination and it reverses the market and it's odds favorable. And I know that it's likely to go down. But Paul, you're going to have to go through and see how many times you took an ass kicking on overrun on gold and come up with a plan to avoid it. Because I'm telling you, gold overruns all the time. Andy showed me 3 or 4 charts earlier today with the same thing. I'm not telling Paul how to trade. I'm not giving Paul trading advice. But what I'm saying is that a little study on gold entries would probably eliminate that loser and give him the opportunity to still capitalize on what the large chart's telling him. So that's how the feedback is going to work, guys. We're going to look at your charts. We're going to talk about the advantages. We're going to talk about the disadvantages. And if I notice that you're trading a market that tends to be erratic, that tends to overrun, NASDAQ is a great example of that, I am going to suggest that you go take a lot of pictures. How many times are you getting run over on these gold trend trades only to have it do exactly what the large chart said? So Paul and you other gold traders, you may want to do a little study on your entries. Look for some patterns that repeat themselves. I'm going to take a break. I'm going to stretch my legs. I'm going to go refill my water. I might even high five myself because I'm in a good mood. When I come back, we're going to look at all the pictures in the room, guys. We're going to talk about them. We're going to talk about the advantages. I will talk about anything and everything that you guys want to talk about. But when you post in the room, tell me why you did what you did. Cindy, I think you put the wrong link in there. That's your log UN rescue link. That's so Jason or somebody can get on your computer. Guys, I'll be back in 5. Talk amongst yourself, post your charts, ask your questions. Just for the record, I do have a bad bottom on a 50-50 with divergence and split triggers. Just saying, that's my instant chart read on crude oil. Do with it what you will. I'll see you guys in 5. All right, let's get back to it. Gap theory, that's a termination condition. Perfect. Absolutely perfect, Cindy. 100% perfect reference. When price accelerates away from the large triggers, hits something, and the large triggers are a full bar away, it tends to close the gap. What does that mean? It means that this long up here that you were so tempted to take, oh no, maybe over here, it keeps you out of that long, doesn't it? Even though it's a strong bottom, this says, don't get in. Nicely done. Great read there. All right, guys, I'm going to scroll up to the top, and we're going to start looking at pictures. Andy and Paul, I think I covered all the pictures that you guys posted from yesterday. If there's one that needs attention, let me know. Erla got us going here. Erla says, termination, best momentum ever. Let me take a momentum style trade and get out. And Erla, I can't stress what an amazing trade that is. What a great looking trade. Termination, full reversal, odds favorable. You let it pull away, snap back. Guys, this is a momentum trade. This is not a high probability trend trade. This is a trade that takes advantage of momentum. This is a trade that takes advantage of trading from areas. This is a trade that a lot of you are going to work your way into. This is becoming probably one of the most popular trades. But, and let me say this real quick in my big boy voice, if you do not understand momentum, if you don't understand the potential to break, if you don't understand momentum, getting to the other side of things, clear path, guys, this one becomes troublesome because you find yourself trading into areas instead of from areas. It's good stuff. I don't know, Rob, show me a picture of what you typed in. You probably mistyped something in there, would be my guess, if it says invalid instrument. Would be my guess. I don't know for sure. Erla, great job on that one. And then, Paul, we will talk about parabolic. I know that you had that request in there. I lost my spot. Hold on just 1 second. Here we go. All right. Ron C. Backwards to start. I mean, guys, this is one of those times where I'm going to look at your trade, and because this is an educational room, I'm obligated to talk about advantages. I'm obligated to talk about those very core concepts. So if we look at Ron's trade, and here's the initial look, it's freaking nuts, right? Everything is down. The momentum is strong. The path is clear on the large chart. The large chart says, Ron, you are a dead man. Should you try to go long? Well, one of the great things about being a chart reader is that you begin to recognize patterns within patterns. You begin to recognize opportunities outside of the highest probability opportunities. And Ron says, man, one thing that I've noticed is that even when everything is going down, the market tends to fluctuate. There's fear and greed. It goes up, it goes down. Here's a pattern with divergence that I tend to recognize that it happened. And you take like 100 pictures of it. And he says, I wonder if this look wins more than it loses. And it turns out that it does. And he's created a plan based on his ability reading the indicators that gives him the ability to make money outside of that high probability trend trade. Oh, you're welcome. I don't feel like I did much on that. But man, it's what a great thing to be able to see stuff from outside of the very basics and capitalize. You could try 0624, but it looks like your chart's loaded. Rod. Yeah, I don't take credit. It looks like your chart loaded though, didn't it? Rob, I'm not entirely sure. Is he? Okay. I'm not sure what your error message is, Rob. This is where I will default to the people smarter than me. Have Jason take a quick look at it, or show me the whole chart with the error on it. Usually, it just means that we typed something wrong in there. Usually, it means that maybe something, maybe it's the dash, or that it needs an 06, or just some sort of weirdness. I hate to admit it, guys, but I'm not the best tech guy in the world. I wish I was, but I'm not. All right, JW, weak top. This one's a little outside of your normal. So basically, and I like this one. And guys, JW, this one looks a little different than what you usually take. But let's look at the read, right? So it's a 50-50 trade is what it is. Okay, that's okay. I would go to Jason, Rob. Let him take a look at it for you because I'm not sure. If I look at my ES chart, nope, my stuff crashed. If my ES, I think says 06. But man, when I'm having troubles like that, I go to Jason. If I can't figure it out in 1 or 2 tries, I go to Jason because it usually takes him like a fraction of a second. Whoa, that was weird. I don't know if you guys heard that. My headphones are messing up. Whoops. JW, you reversed engineered a trade that typically fails. And guys, this is a pretty good chart read. So if you look at the KISS plan and you follow the KISS plan and you believe in the idea that divergence kills a 50-50, that is probably, and JW, correct me if I'm wrong, that's probably the precursor to him going short, even though this says up. Because on a 50-50 trade, that area not broken, large triggers not through, divergence is one of the biggest things in that KISS plan that says that it's likely to fail. Divergence is one of the biggest failure points in a 50-50. JW says, man, I know that's it. I'm not going to go long with divergence on a 50-50. But if I get odds favorable momentum, large and small, I'll get below those synthetic triggers and see if I can't capitalize on the way down to the midband. And man, I like this trade. And at first glance, it's like one of Ron's trades. It looks so aggressive. It looks like it's such a fight. But once you get those little patterns down, your ability to read charts opens doors. And I'm a fan. All right, Paul, you said early entry. Odds favorable, strong triggers, 5-1 stacked, perfect entry. Why was your entry early, Paul? Can we talk about that? It does take a little bit, doesn't it? But isn't it cool how the more it comes through, the more time you spend with it, the more you study it, it all seems to come together. So Paul, your large chart's perfect, isn't it? You still have momentum, the path is clear, everything is beautiful. You take the entry right at resistance, right inside of favorable large triggers. And you said early entry. Did you say, and Paul, please stop me if I put words in your mouth. Did you say early entry because, 1, you broke your rules, 2, you got stopped out, or 3, it started to go down from way the F beyond where the rules say it should? Not should, let's say is most likely to continue from. Because what happens here is, 1, you didn't break your rules at all. Not even a little bit. Which means that this is a trade that typically wins 70 to 80%. Which means that if you lose, it's cool. It's part of it, right? Would you agree? Momentum, clear path at the area, you get stopped out. And this is what your brain is going to do to you. When I say you're, Paul, I don't mean you. I mean everybody in this world, I think, is once this happens, you start searching for reasons that you made a mistake. You start searching, where did I screw up? What did I do wrong? Why didn't this work? Because you believe that when the rules are met, it should work, right? And guys, this is where pain comes from. This is where sadness comes from. This is where sorrow is born, is when you believe that every trade should win, that you believe you know the outcome of the trade. The only thing you were sure of, Paul, is that you had your rules met, so you took the trade without hesitation, which means huge victory for you. Huge victory for you. It means that you trust the rules. It means that you believe in the rules, and more importantly, it means that you understand the rules. And one divergence on a high probability trend trade doesn't scare me at all, right? It takes 3 to keep me out. So you did everything perfect. Everything perfect. And then what happens is, if it does end up going down, we don't naturally go to the idea that, well, I guess somebody with more money than me wanted it to go up to here, right? I guess somebody pushed it beyond my spot. You start just frantically thinking, damn it, now I'm going to start entering from 8 ticks beyond the mid band. And then I'm going to start doing it. And then I'll start entering, and check this out, Paul. Despite 3 divergences in the same price range. And I know because I've been a victim of this myself, guys. And I say victim, but I did it to myself. I'm not a victim. Is what I do is on every losing trade, and I go through this process still to this very day, is on every trade that I take that loses. And guys, I take losing trades. I ask myself, did I follow my rules? And Paul, I would take your trade and put it before a court of law and defend it to my dying breath because you did it perfect. And it just didn't work out, and it's just a cost of doing business. And if you go back and you ask yourself, if you value the execution over the result, if you say to yourself, I followed my rules 100%, but this one didn't work, what you'll find is you become more comfortable taking losers. You become okay with that cost of doing business. So Paul, I don't think you entered early at all. I think you entered at the perfect spot, and I think that's just one that didn't work out. Beautiful trade. And you know what? It's such a beautiful trade that I'm going to steal your trade, and I'm going to open up my spreadsheet, and I'm going to go to the client trades, and I'm going to drop it in here. And I'm going to throw it in there because I want everybody to study this look. This look wins more than it loses. And that time it just happened to lose. So awesome. You're applying to Mensa. It's about time. Good job, Paul. I love it when you guys tell me you hit your goals for the day. It can be done. It can be done. You just have to learn how to do it. Nice job. Who's next? This is Paul, who just hit his goals, saying, "Arg, should have kept his stop in place." Man, that's easy to say, or should have kept your target in place. 61. Oh, so I see. Yeah. You know how to get paid. You deviated from your plan and it got you. It's like they knew that you deviated. It's like they have cameras on you. Strong bottom directly into a termination, and then it reverses. Let me see where we're at here. 50-50 with divergence on the 5-1 from a strong top. And you chose not to take this one, Paul. And that's okay. I like it. Just following your rules. What a great idea. And then Paul taking that quick hit momentum. Very nice. And then getting stopped out high tick. And man, this is just like yours. Paul W., this is exactly like Pinieski's. The exact same look, isn't it? Odds favorable. The difference is it's a 50-50. But it's still strong triggers. It's still everything down. It's still in at the right spot. It just didn't work. And guys, if you go through and you follow your plan and it says that this look wins more than it loses, then just celebrate the execution and don't focus on the idea that that you lost the trade. Can't stress that enough. Awesome, Gary. And then this is Mike. Good top, odds favorable, 50-50. You were pissed when this one lost. But in post-mortem, I love that you call it post-mortem. You had divergence on a 50-50 that you ignored because of the good top, right? I agree with that. But you did have split triggers. And you took your entry outside of the triggers. Gosh. Mike, this is such a level of maturity to be able to come back after you're upset and then go through your plan. And what a lot of us don't like to acknowledge is that in the heat of the moment, especially when we're really coming to terms with our plans, we'll deviate a little bit. We'll go outside of it a little bit. And then somebody said earlier today in here, I think Paul W. posted or somebody posted, Andy may have posted, I can't look at a chart and read it with clarity the way Mark does. And Muser, or who was this? No, it was Haji. Haji, what you did here is you did exactly what you do, right? This is your thing. Split triggers, 50-50, like that's your thing. You know it, right? But now you're not posting in the room and asking what went wrong. You're coming back to it after the trade. You're studying it. You're reanalyzing it without any emotion. And now you're one step closer to not making this again, right? And this is just one of those trades. It doesn't serve me. I've got 2 correction points. I've only got 1 line inside of the correction point. And then a second higher, of course, would have taken you out anyway, even if it worked. But 50-50s aren't guaranteed to break. And Haji, I think this is a great trade. And I think, I think it's a great opportunity. I think it's pretty amazing that you're able to go through and have the ability to self-police because you understand your rules. And then there's a termination. No longs. That sure sounds smart. Weak triggers at a fib. Don't go long. Pineski, we could almost write a rule for that. Great job, dude. And then Paul W. Odds favorable, clear path, perfect entry, out at trouble. Your synthetics aren't printing, Paul W. Your areas from your 5-1 don't, well, they are here. That's weird. Out at trouble and then break even. And I think that is amazing management, Paul W. Because the large chart looks amazing. Large chart looks great. And then a second lower divergence lets us know to get our dukes up. Get ready to manage, get ready to fight. And I think you handled that one perfect. So let's celebrate, right? Guys, when you do something outstanding, celebrate it, embrace it, be happy about it. Can you guys hear me? I keep getting static in my headphones, and I think that it's Discord that's doing it. Okay, I just want to make sure. Rockstar Paul W. And then Pineski. And this is the deal. And guys, I want you to, and so Andy, here's your lesson. Remember we talked earlier about a parabolic trade, about a strong trending market, about a market that's really pushing in the direction of everything and can't seem to be stopped like a freight train. Guys, you're going to see this sometime. So I'm going to go back to the user guide real quick, and I'm going to go to the trigger lines. And this is a little next level, but Pineski did it perfect. And I just like saying Pineski because it sounds cool. The best of the best, the 100% best of the best, guys, is when it's odds favorable. This is the one that for the brand new user, embrace. But what happens is sometimes you get these really strong trending markets. You get these markets that have like 30 bars with no down bars in the same direction that break 3 or 4 areas. And guys, this is what we call just as it's a strong trending market, and you can recognize it typically because you get that little dashed look where the two triggers run right next to each other, where those moving averages are stuck right on top of each other. When you have this, most people, not most people, people with some experience, people with understanding will go through and they'll trade the midband until it stops working. They'll trade that midband until that midband quits holding. And that's exactly what Paul did here. Is Paul said, you know what? I'll take it from the midband. I understand that it's not odds favorable, but it is a strong trending market. I haven't hit a fib. Let me get in and make a little money. And I think that this is a beautiful trade, guys, and it shows kind of a next level awareness. This is one of those things where I do not have an area inside of favorable large triggers. I really don't even have odds favorable. But Paul's recognition of the strong trending market, this is 1, 2, 3. Okay, that's your 30th bar right there, right here. Can you hear me? Guys, give me a Y if you can hear me. Okay. I think I was counting in my head. Guys, this bar represents your 30th bar in the same direction. Multiple areas broken. This is where Paul says, dude, I got a strong trending market. I'm going to buy the midband until it stops working. Yeah, and it will stop working. It will stop working eventually. But until it does, it creates opportunity. And Andy, that goes back to, or no, I'm sorry, Paul W. That goes back to what you were asking earlier today about that look with the dashed look on the top of the trigger lines. That's your strong trending, 30 bars in the same direction. And you can try this one until it stops working. But the thing is when it stops working or you hit a fib, you have to be okay just kind of pumping the brakes on it. It's a little more advanced. All right. Muser, weak trigger or weak top, right? It's a termination, but it's not a clear path. Triggers rolled. You wait for the clear path and you absolutely have it. And you say you missed the first pullback, which was perfect. Maybe not perfect, but it was pretty good. Didn't give you a whole lot there. And it didn't give you one-to-ones or an area to bounce off of, and it never made the midband. And that midband would have been higher at the same time. And then as price moved towards the fib, you saw the 5-1 trigs closing in. The large, it is weakening. Nothing to do here as a fib will most likely hold despite the strong triggers. Well, it didn't quite hit the fib, but you did notice a slowdown. You did see the divergence. You did see the split triggers. And notice how that midband isn't inside of it. So you've got split triggers, you've got no areas inside of them, you're printing divergence, you're seeing a loss of momentum, and you're one tick off a fib. Muser, I think this is great restraint, and I do think this would have been a hard one to catch because it never really made it up there. Even with the strength, you didn't quite get that area. So great chart reads, very nice. And then Zorro, everything is screaming down. You get below trouble and you get in. You get out at the first sign of trouble. Little late on the exit. You don't know if the midband's going to hold because it's outside of the large. So you take the confirmation close below and you're able to capitalize. Zorro, this is absolutely beautiful. This is gold, yes? And this is kind of that same thing. That's 30 plus bars broken areas. And the midband does hold, but you're like, man, it's gold. Gold's a little crazy. Let me get on the right side of everything and then take it down. And Zorro, just beautiful trading. And then Paul W., I think we already saw this one, didn't we? Oh, that was Zorro. Yeah, that was Zorro. And then, yep, we saw this one, and that was a great odds favorable, clear path, perfect entry, second lower, you managed out. I don't think you could have done that one any better. Good bottom. Odds favorable, entered before divergence, printed with a strong bottom, smalls above large. You would have entered anyway. Man, and they just got you. And that's, Haji, are you in here? Guys, this is me asking. This isn't me telling. Is it just me? Or does gold overrun a lot? And I'm just asking because I see so many charts. That's the RTY? Okay, I don't know if RTY does. I see so many charts. Man, this is just unfortunate, right? That happens. It does, TLC. And it looks like it cleared before it came back. That would have been close. You had momentum. So I guess the second question then, TLC, is if it kills you all the time, why are you still trading it? You stopped? Yeah, I stopped too. I tried to trade gold. I quit. I wouldn't do it anymore. Man, Haji, I'm trying to find a challenge on this one, and I'm not sure that I can, right? Your smalls are outside. They have returned. It's not odds favorable momentum. That's odds favorable momentum, the gap between the two. That's the slowing. But, dude, you're over the areas. 04, 04. Smalls are above the large. And I guess your correction point is this big. And because you got in at the top, it's hard to want to keep it much lower than that. I get it. That's just unfortunate. And that's really all you can call it, is unfortunate. I think that it's a good look on the large chart. You have momentum. You're coming from that termination. Everything says up. Your path is clear. You've got your window of opportunity is about 4 or 5 ticks wide. Sometimes when I have trades like these, and this at this point, Haji, it's great. I like to play. I think that there's lessons in everything. And sometimes I'll ask myself, if I had gotten in at the bottom because of divergence, because I saw divergence print and I got in at the bottom, would I have put my stop there? I think your stop's appropriate. You didn't want to give up a lot, right? Because you're in at the very top. But when divergence printed, can we say if I had gotten in right here, would I have given it a little more breathing room? And I don't know what the answer is. Because the reality is you didn't get in at the bottom. You got in at the top like you were supposed to. And these are the little things that I think about now that I never thought of before. That was your ATM stop that you didn't need to adjust. You're outside of the window of opportunity. You're 1 tick below the triggers. Maybe this is where the idea of the correction point, right? Giving it 4 or 5 below. And again, I can't find anything wrong with this trade, and I'm certainly not trying to pick it apart. The only thing I'm trying to do is see if maybe we can find some little context clue that helps a little bit. When divergence prints, does it need a little more breathing room? And I don't know what the answer is on that one. And I'm not super familiar with the RTY. Maybe. Or if divergence prints and you're losing momentum here, like, why do we get in at the top, right? We get in at the top because of odds favorable. This may be the one thing here. I get in at the top when the large chart is perfect. Maybe if it's slowing down, I adjust my expectations. That when this printed and that's not perfect, maybe it is more likely to push lower. Maybe that loss of momentum is giving the small crowd a little more of an opportunity to drop it a little lower, and I rethink my entry. And I know that you got in before divergence printed, but maybe the momentum on the large chart can be just something, and I would have to go back and I would want to study 10 or 12 pictures with the weaker triggers, right? Like I would want to go back on the large chart. Maybe we can find an opportunity. So let's see if we can find a trend trade that looked like it failed with that same sort of look. This is, see, for me, this is fun. Like for me, this is pretty cool. So there's one at, wow, was that 11:54 yesterday? So there's one where I would be pretty tempted, right? Because that didn't even print yet. That was the noon update. Whoops. Man, okay. So there's one that when it looks like that, because that blue fib wasn't there yet, that's pretty tempting. Wouldn't you agree? I think we may have just found a cool little study thing. That looks pretty good because the blue's not there. This is still momentum and this is a clear path. And then when I see the divergence print, it does in fact push higher. And when the divergence is print, it does push higher. And when the divergence prints, it pushes beyond. I don't know. And this is just me thanking you for giving me something to think about. This is me saying, dude, Haji, thanks. These are things that I don't see all the time. These are things that when I recognize a pattern that brings me success, I love to turn it into a rule. And that's the second half of it is finding these things that maybe aren't giving me the best of the best. Man, I think my chart's stuck. Let me check my connection real quick. Oh, I'm not connected. No wonder. I was like, that thing's not moving. All right, George Val. So thank you for that, Haji. George Val, you went long up to resistance and it worked out great. You let resistance hold, and when it became odds favorable, you went short all the way down to support. When support broke and turned into resistance with the momentum, you weren't sure if that's where it was going to stop because it was outside of the triggers, so you caught it on the way down. And when it turned into a pivot stop out, you said, all right, that's cool. I'll jump ship. George Val, beautiful, beautiful trading. And the one thing that I want to point out is in each trade that you took, you're trading with direction and with momentum. Trading with direction and with momentum. And you had a clear path every time. Taking advantages and finding your way to do it. I love that. Guys, that's what the software is. Termination, reversal, odds favorable. When am I willing to take a shot on split triggers? Muser, when that termination gives me odds favorable. Strong top, way cool OFM. I love that. Open highway, entered the pullback to the midband, rules bound trade. Only thing you didn't like is the splits. However, the synthetics were closing in, could have let it run, but got out and exceeded daily goal. Sit on hands benefit. Sit on hands benefit. So when you don't fabricate trades and let them come to you, you find it easier. And guys, remember when I said there'll be a time when you're cool taking it from that split trigger? That's the precursor right there. When you're coming from this and you have that, that's where I'll take a shot. That's where I'll take a small loser if it doesn't work and be willing to re-enter if it pushes higher. Great job, Muser. Great job. Guys, that's the second hour. Hey, look, the market's moving again. $50-50 and divergence seems to be what killed it. Isn't that outstanding? 50-50. Two divergences killed it. Textbook termination condition. There's the gap theory Cindy pointed out. Textbook termination condition. What an amazing fight. Do you guys see that? Is it just me? Or does that look like a market that can't figure out where the hell it wants to go? What an advantage to understand termination conditions. What an advantage to not feel compelled to trade into areas likely to stop the market. What an advantage to be okay not being in a trade. Guys, this market is in a range. It's a pretty big range, and there may be opportunities from one side of the range to the other, but you're pretty much in a range right now. Your rules have identified it for you. So I'm going to take 5 minutes, guys. I'm going to go stretch my legs again, go scratch my dog behind the ear. When I come back, the last hour is yours. So here's what I want you to do. If you have a question about anything, doesn't matter, ask it. If you see a pattern and you're curious about it, let's go back and study it. Let's scroll back historically and see if we can find it a few times. If you're curious about, man, I don't care what you're curious about, just ask and we'll find answers. So I'll be back in about 5. You guys go run a lap around your house, stretch your legs, breathe some fresh air. I'll see you in a minute. All right, guys, coming back into it. Wanted to share a picture that I took this morning. And this was a 50-50 trade. And I want to talk about why rules are so important, guys. Is you get to the point to where you read... Whoops, sorry. Can you guys hear me? Man, Discord is weird. No sound. All right, I'm going to try this again. Can you guys hear me now? All right, I was talking to myself. It's too bad because I mean I was brilliant, guys. It was like the smartest stuff ever. I'm sorry you missed it. I don't remember any of it. Probably fixed the world's problems there for a second. I wanted to share this one with you guys. This happened right before class, and I was going through and I was like, let's just do. Let me make a visual of what it's like to be a new trader. And I want you guys to go through it. And these are the things that are positive, and I'll circle it, right? As a brand new user, I see odds favorable momentum and I get excited. And I'm like, yes, that's the best of the best. That's the one. And that's like the first lesson that really comes in. And then I have to talk about termination conditions. And I get these lessons down and I say to myself, you know what? That's not a broken area because the very simple rules say that the small and the large have to get through, which means that this can't ever be a high probability trend trade. It just can't. It's impossible because I don't have a clear area. And then I start to incorporate those lessons. Where is it coming from? Is it a good top, a bad top? Is it a strong one? And if I don't know, that's your cue to raise your hand and ask. But when I do the read on this chart, guys, if I start at where it's coming from, I say to myself, this is not a termination that reversed the market. That's a bad bottom. And then I start going through my checklist in my head. Well, do I have odds favorable momentum? The answer is yes. I love it. And then I say, do I have a clear path? And I'm obligated to say no. It's a 50-50 look, meaning 50% of my triggers are through and 50% are not. And then that's one thing, right? It's one thing to know that it's a 50-50 look, but it's important that you understand with the 50-50 look, this area has the potential to break, but it's not a broken area. It's not a clear path. I'm giving up that advantage. So to have a glimmer of hope, it makes sense that I insist on not giving up momentum or an area that offers low risk. And how did I come up with that, right? Like, how do I come up with the idea? Because it's easy to say, look, it's a 50-50. But you have to ask yourself, well, what the hell does a 50-50 mean? It means, here we go, we're going to make our little toy. It means that I don't have a clear path, which means that my advantage is gone, which means that for me personally, momentum and an entry area have got to be key. And then I have to go back to chart reading. Well, divergence is a loss of momentum, which means that I'm very clearly giving up another advantage. Small triggers not outside of the large is a visual that I don't have the momentum. And your brain is going to say, but look, guys, you have an area inside of favorable large triggers. So what you run into, and let me go back to the picture, is that if you're doing your chart read, you know from the get-go that you don't have a clear path. You've also read that you've given away momentum. And if you take this trade, and if you take it more often than not, it's because you think it's going up. Not because your rules are met. You hope it goes up. Not that your rules are met. You want it to go up. You wish it would go up. You need it to go up because I went short into support down here. And what happens is it doesn't. More often than not. I didn't know if this trade was going to win or lose. I was hoping that it lost for the sake of discussion. But what happens here, guys, is if you start going through and you try to really take the emotion out, and you really try to get to the point to where you're not trading what you feel or what you think, but rather whether or not your rules are met, then this is an avoidable loser. And avoidable losers are the greatest things to recognize, because avoidable losers turn into trades that you don't take. And trades that you don't take that don't have a statistical advantage, those are trades that you typically don't lose. You can't lose a trade if you're not in it. You can't lose a trade if you never enter it. And this one did rocket down right off of that 50-50 that failed because of divergence. And I took it on simulator to make the point to go through to look at it. But guys, if you don't take these trades, if you don't post them in the room, if you don't break what you've done down into a chart read, then you really will be doomed to repeat it over and over. And you're going to look surprised every time it loses. You're going to be like, "Oh my gosh, I thought this one was going to win." So tail into momentum, clear path, divergence, triggers are weakening, no areas inside of triggers. And guys, this is on an area that's been range bound for a while. My only option is to say, man, my rules aren't met. And no matter what happens next, my rules aren't met. And if it goes down for the next 3 days, my rules weren't met. And if for some reason it does everything I thought it would, well, my rules weren't met. And I think that's the lesson that I think is the most important thing. The idea that the sooner you say to yourself, my rules need to be met, or in Debbie's case here, Debbie looked at this one and she said, you know what? I don't have the best advantage ever of momentum, but I'm in one of those strong trending markets. And I do have a clear path on the large chart. And I also had no divergence on a pullback to a mid band right inside of triggers. Let me get in, let me get paid. And when it does what the large chart says it's going to do, let me not lose any money as I get close. Let me really manage this one tightly. And Debbie, this is a beautiful trade. This is taking advantage. Same thing. There's your pullback. So range bound muser. This is a pullback to support inside a favorable, and then she exits, right? Odds favorable, clear path, the perfect trend trade. And when she hit resistance, it was so strong she didn't exit. But once she got below her small triggers, she did and said, I'll just re-enter on another trend trade. Debbie, this is out freaking standing trading. Nice job. But one more thing, and then I got you, Muser. You guys want to see something cool? Is this price range Debbie got paid in, and then she exited, and then she got paid in it a second time. How cool is that? She got paid twice at the same price because she didn't get greedy. She exited with the loss of momentum, and she re-entered because her rules were met. I love this. I love everything about this. All right, Muser, what's a range-bound market? Great question. Your runner has a tight stop. Why not? We're in this to get paid, right? All right, Muser, I know you're good at termination, so that'll help you. Price reaches Fibonacci support, termination. Price reaches resistance, termination. Price fails on a 50-50 at the same support, pivot, stop out, termination. Back to the same resistance, termination. So when you see the market caught in between two rule twos not met is the easiest way to say it. What you end up with is the buyers and sellers jockeying for position. These guys are doing their best. And let's see what the market was doing today. You can see it all day. And who was it? Cisco? Did you post that that crude had gone below 80? Hadn't done that in a while, has it? And look at what the market does. The sellers push it down, and there's a huge fight. And the buyers try to push up. Someone did. I'm giving you credit for it. and then there's a huge fight. And then the sellers try to push down again. And there's a huge fight. And rule number 2 keeps you guys out of the fight. And notice that all these fights happen at key areas. And key areas are where we know whether or not rule number 2 is met or not. So when you get caught in between two number 2s, Muser, it's kind of a range bound. And this is where you can say to yourself, these guys are struggling. I'm going to wait for it to all agree. I'm going to wait for it to all come together before I try to break out of the range. And let's see if we can find another example. There's a great one on the S&P. Bing, 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 bing. And they're just trying, right? The buyers are trying so freaking hard to push that thing up. And the sellers just, they stop them. The buyers have been in control all the way from the fib. And then when they hit here, some sellers pushed, but the buyers weren't done. And when they got here, the sellers pushed, but the buyers weren't done. And here, the sellers pushed harder. And the buyers tried, and the buyers tried, and they never broke Fibonacci resistance. And then finally the sellers took over. But the sellers told them 1, 2, 3, 4, 5, 6 times through termination conditions, guys, your reign of terror is over. We're about to just drop it out on you. And sure enough, they did. And now we start again. The sellers push. The buyers test the waters. They do it again. They push harder. The sellers aren't done. And when they get here, the buyers go, hey, guess what? We told you 3 times we're going to steal your momentum. Let's give you a shove. And you start reading your charts like this. You start recognizing these things. And then what you do, and what we all do, is instead of getting caught up in those fights, we just look for our advantages in between the areas, guys. We know exactly where decisions are being made. We have trigger lines to help us understand whether or not we have the advantage. Good morning, Cap. And it just becomes this little dance. So I'm into the termination condition now, right? My triggers are weakening. And I'm saying to myself, that's not a clear path. And then I say to myself again, well, I don't even have an area inside of favorable large triggers. And I'm saying, let's see what happens. That's all it is. Doesn't say go short. Doesn't say try the long. It just says do nothing. Does that make sense, everybody? I can't find rules met. I can't find 2 out of 3 rules met, which means that I'm choosing to do nothing. In my own personal trading world, I choose to do nothing with this look. Because I can't find a pattern that I can go back and study that wins more than it loses. Even here, I had areas inside of triggers, right? I had something. I had that path clearing and maybe an area. And even here, I at least had an area to bounce off of, right in between the correction points. So I knew where my stops had to go. So you'll get to this point where you start talking to yourself. Again, Paul, with gold. Oh, look, it overran the areas again. I'm telling you. I can't tell you guys how to trade. This is probably number 50, Paul, that I've seen with gold where it doesn't respect. Don't you have the exact same look from earlier from gold? And I'm asking, and I know that you're frustrated right now and you probably just want me to F off, but Man, if I keep walking up to the biggest dude in the room and calling him an asshole and he keeps knocking me out, there's got to be a point where I stop calling him an asshole. There's got to be a point where the market you're trading overruns so many times on you that you stop trading it. And then, Paul, if you really want a hint, maybe something to give you that idea. Don't fight those triggers. Those same triggers that put you in momentum trades are screaming against you when you enter the market, right? Look at this. They're up, it pushes up, it pushes up. I get below them and the market goes down. I get above them and the market is still going up. Maybe gold users take your range chart and respect those triggers and say, you know what? I'll take trades when it closes on the correct side of those small triggers. Does that make sense? I hope so. Because I keep watching you guys getting absolutely shellacked on gold. Gold is an emotional market. I'm going to open gold up. We're going to look at this thing together. Am I the only one that's noticing this? Can you guys hear me? Okay, I just want to make sure. And I'm going to tell you guys right now, the look that Paul just showed, and I hate it when you guys take losers that are rules-based. There's got to be a point where you say that the rules don't seem to apply to this market. The NASDAQ is one of those markets. The rules don't seem to apply to it, so you have to formulate a completely different plan to take entries. And I don't think gold is much different. And it's still calculating here, but odds favorable and overrun, right? And then once you get to the correct side of the small triggers, down it goes. Let's look up here. Odds favorable, that's at 11 a.m. Oh, I'm still calculating. I'm probably going to crash this market, or my Ninja Trader. I don't know what that means, TLC. Area not inside and it overruns. That one held. Just looking for that clear path. You're using the white bars. That's great if you know how to use them, right? At 10:11. What did it look like at 10:11? $10.11 was the perfect looking trade, right? Everything looked good. Hold on. Maybe you do need a range chart to trade gold. At 10:11, when you finally get below them, it pushes down. Strong triggers all the way up. So maybe we can correspond. If the small triggers are strong against you on gold, keeps pushing, keeps pushing, keeps pushing, get to the right side and off it goes. Keeps pushing down, get to the right side, off it goes. Termination pulls back to them, down it goes, momentum. Look at the small triggers pushing up, guys. Maybe there's something to this. Maybe I'm learning how to trade gold. Sucks to be frustrated. And if you post in the room and you just say, ugh, gold, if you don't want help with it, that's cool. I don't mind. But guys, I'm going to try and break it down and help you. So the two things that I notice from this trade. One, you're fighting the fast triggers. And two, I'm noticing that when the smalls are up, they tend to screw things up. But once you get to the right side of them, it works out. At least momentarily until that divergence tells you to get the hell out. So can we create a level of patience through some patterns that we recognize? I hope so. Not a clear path. At the time of the pullback, it's not a clear path. Took a chance. And Cav, I would, and guys, I'll tell you if I think you got lucky. At this point on the NASDAQ, you have a 50-50. The smalls turned against you. The large turned against you. The smalls are below the large. You're trading into divergence. That's a hope trade. Especially on the NASDAQ, that qualifies as a hope trade. And then entering below the small triggers, below the large triggers, on a 50-50 after multiple divergences, because I see this divergence here. That's the FU I'm invincible trade. And it worked. Does that make sense? That's two divergences on a 50-50 from the wrong side of everything. I love that you got paid. That's great. And I know that you manage these assertively. And I also notice that these trades come out when that says simulator, and you tend to not do that in your live. But that's just, if I'm counting advantages, I ran out of them a long time ago, especially on the NASDAQ. Because remember that, and this isn't for Cav, this is for everybody. Cav knows this, but if you're a NASDAQ trader, your entry chart on the NASDAQ is this chart. So that means that you're going long with this look, with the smalls below the large, or at least this look on this chart. And there's not many of you that would do that, right? There's not many of you that would go short against that here. NASDAQ's a different animal. But the cool thing is, and let me go back to your picture, Cav, that if you have quick reflexes and your chart reading tells you what the problems are, there are opportunities within the opportunities. If you are astute in your chart reading the way Cav is, you can capitalize on some iffy looks. And it's very similar to what Ron does, where Ron goes, man, I've seen this pattern so many times, I can take advantage of it. Or my brother does it. I've seen this so many times, I can take advantage of it. And it's kind of cool how that works itself. All right, guys, what do you want to talk about? Sorry, taking a picture real quick for somebody. Taking a picture. Check out Muser's trade earlier. I did, Chris T. Did you miss it? Are you and Muser in cahoots? There it is. Termination, odds favorable, clear path. In at the fib, Izzy? Right on, I love it. This is the one, Chris T, where I said, when am I willing to get in at that area when they're split? When am I willing to grab that mid band instead of worrying about going up to the synthetics? When the setup is beautiful, when the terminations reverse it, when everything is odds favorable, when the path is clear, I may fudge on my favorable large triggers because I'm a chart reader, because I've seen this pattern and I like the statistical advantage it gives me. I like this trade. I like this one very much. Did you take it, Chris? Are you guys taking the same trades? I think it's cool when people have friends that they trade with As long as you agree, that's the thing. My brother and I talk all morning, and it's so humbling because I'm not where he is. And guys, I fancy myself a pretty good chart reader, but I don't, I'm not John Novak good. And it's fun because I learned so much from him. But there's stuff he does that absolutely terrifies me. And I think that's just part of it. Guys, look at that crude oil. They still can't figure it out. Nice. Go to the beach. How did you shoot yesterday, Ron? You went golfing yesterday, didn't you? 94? I got you this time. 92. I have, so guys, you know when I say process yields results? I think I have finally figured out how to hit my irons. And oh my gosh, little directional issues. But I got a 92 yesterday. I had the best hole of my life on the last hole. I usually blow up on the 18th. It's your birthday, Gary. Happy birthday. Hell yeah. Man, you're 3 days older than me. Medellin goes on the crowd. Ron, I think you would be fun to play golf with. You're going to be on my people I need to play golf with someday. I think if nothing else, it would just end up being a lot of fun and probably a little bit of trouble. Happy birthday to you, Gary. Hope you have a great workout. So guys, crude is back into the termination. It is Muser, there's your range bound, man. These are hard to trade like this. And guys, there's days where it just doesn't do what you think. Some days, termination conditions create beautiful reversals, right? And sometimes those reversals give you 50-50s. But because of the termination, because of the momentum, because of the 50-50, because you believe in fibs, some of you may put a limit order at the bottom of the window of opportunity because you clearly define the areas inside and you know exactly what your risk is. You traded NASDAQ well on Sim? Nice. My ability to trade well on Sim has everything to do with where I am mentally. If I'm bored, it's useless. I shouldn't even be in front of the market. Yeah, man, that's the key. Does everybody see what I did here? Beer hole every 3. I'd be passed out by the 9th. So guys, what's the chart read? Termination reverses the market, creates odds favorable momentum. Don't have a clear path. I'm a 50-50, but I don't have the potential for divergence. I do have areas inside of favorable large triggers. I do have strong triggers, and where the market is likely to continue is clearly defined, guys. If you're a KISS trader, guess what? This one fits your rules. The only thing I'm not in control of is whether or not it comes back for me. I don't know if it will. Having patience is so hard. Guys, call my wife. Ask her how she does it. She's great at it. She's been married to me for almost 27 years now. There we go, Cav. Odds favorable, clear path, freaking easy money. That's the one. Was that Cav or was that E. Webster? That was E. Webster. No, who was this? Did I miss one? Nope, that was Joel. Joel, beautiful. Cav, would you mind giving me the screencast link? Guys, Discord's not letting me open your pictures. I can bump out of here. Joel, that is picture perfect all the way. I can bump out and bump back in, but if you guys can give me the screencast links, show you right now. I'm trying to open this image all day long, and it's not letting me do the copy-pasted ones. This happened to me yesterday. Here, sit tight. I'll bump out and bump back in, and we'll see if we can get it fixed. Discord has been trying its best to tear me up lately. Bringing it back. Here I come. Don't panic. On my way. You guys still hear me okay? Damn right we are, Joel. Cool. I love it. Okay, let's see if that little bit worked. Let me see if I can get E. Webster's. And E. Webster, nice to see you in here. Same trade. Absolutely perfect, E. Webster. Joel, absolutely perfect. And then Cav says, you know what? We can do it the other way too. Weak top directly into support. You take the short into the termination condition with all the momentum. It is NASDAQ. You fought the small triggers and it made you nervous for a second. And then once you get to the right side, down it goes, easy money. Nice trade, Cav. Directly into a termination condition, right? And guys, this is the beauty of it. I want you to see this. And this is the things that you won't really notice as a brand new user. And I'm using Cav as an example here. The brand new user, blanket rules, no shorts, bad term, no, right? That's what I tell you guys. Don't trade into termination conditions. It's going to whip your ass. That's not what Cav sees. And let me show you what Cav sees. And Cav, please correct me if I'm wrong. Cav says this is the best momentum ever. Ever. Odds favorable, huge gap between the two. He says, I realize that it hit support, but I also realize that it pulled back directly to resistance and absolutely nothing on any of my charts blinked. Not even a little bit. Which means that the reaction off of support was squat. And he says, let me get in at that same fib. That's more likely to hold because of this look, and just does it beautifully. And what's cool is that's not a high probability trend trade, guys. It's trading directly into a termination condition. But when you understand what you're looking at and you begin to see these things with a little clarity, what seems super risky for the new user is just, man, this is what we're doing today for the person with the read. So Cav, awesome chart read, and then creating a trade, creating an opportunity where a new user will see none. A new user will say, not mine, not going to do it. An experienced user says, when everything is screaming to the downside, I triple dog dare you to keep me out of a short position. I'm going to go with momentum. I'm going to go with direction. I'm going to trade from an area, and I'm going to trade to an area. And Cav, I love everything about this one. Nicely done. For the new user, it's terrifying. That's a termination condition. So let me share this. We're at that point because you guys aren't asking questions, so you got to listen to me ramble. Guys, the idea is to have a foundation, 100%. You've got to have a solid platform. The high probability trend trade is your solid platform. If you're brand new, I'm telling you, once you understand momentum and a clear path, Zorro, you haven't been with me that long. You're crushing it with momentum and a clear path. Erla, you're doing the same. Joel, you're killing these momentum trades, right? Everybody sees what they see. The JW trade takes advantage of chart reading patterns. It's amazing. So does Ron's, right? There's all these opportunities. You just have to figure out what yours is. But in the beginning, guys, I throw this big safety blanket over you and I say to you, man, until you're comfortable, don't trade into termination conditions. And until you can read your charts strong, don't trade without momentum. And guys, if the areas are outside of favorable large triggers, it's all right to sit on your hands. And I do this because I want you guys winning more than you're losing. I gave you guys the KISS plan because I want you to feel that success. I want you to embrace these advantages. And then you're going to grow as you see it, guys. And you're going to be tempted to be the trade police. Don't. Trade your plan. But you get the time under your belt and suddenly you start seeing more. You start doing more. And guys, if you saw this one, which was strong triggers and a clear path, and you entered short and you lost, guess what? Nice trade. That's a cost of doing business. I would have taken that one all day long. We would have lost that together as a class. And it's not because I hoped that it would go down or I wished it would go down or I wanted it to go down. It's because my indicator said from a good top with this level of momentum and absolutely nothing in the way and something to bounce inside of these triggers, guys, this one's more likely to go down than up. The other thing that this trade told me is that this was my only area where I expected it to go down, which means even though I lost it, I didn't lose it big. I gave away probably 5 or 6 ticks on this trade. And now I'm just going to wait. I'm going to wait and see if I get something. And then for you guys that begin to incorporate range charts, there's that same wrong side of the triggers. Once it gets to the right side, it started going down. Just saying, that's for my range chart users. So who's next? Probably. Because, Haji, wouldn't you agree that if this mid-band inside of favorable large triggers doesn't create a bounce, I'll give it a little bit of wiggle room. But man, and let me show you this. And this is one of this was eye-opening for me. I think it was John that did this for me. Let me get rid of this chart real quick. Haji, is this where you want to take the short trade? Look at your triggers. When it looks like that, are you thinking about shorts way up there? Or are you saying, holy crap, it's going past the mid-band. Holy crap, the small triggers have turned up against me. And the cool thing is that you can use that idea of the correction point, and you can use that idea of mid-bands, fibs, yellow 1-to-1s inside of the correction point. And you can say to yourself, if it goes past where it should turn, I'm okay exiting. And then if it's really going to go down, this stuff will roll, right? If it's really going to go down, this stuff is roll. But now I'm fighting the small triggers. They're inside of the large triggers. I don't have momentum. I've already had 2 divergences up, but I also have 2 divergences down. My large triggers are up, but my synthetics are down. My areas aren't inside of them. So when this one failed, beyond the best of the best spot, yeah, that pretty much ended my run. Does that make sense? And the cool thing is you get to the point to where you say to yourself, I've studied this look enough, that's the spot. If it doesn't go from there, F them. They can come take my money 5 or 6 ticks beyond, and then I'll wait for things to roll, right? I'll wait for the small to get back below the large. I'll wait for something to give me an indication that the market still wants to go down. But by the time we get here, there's no indication that that market wants to go down anymore. And it still may. But did you notice the divergence in the weak triggers too? A little indication that things are slowing down. Not a deal breaker for me at all. I believe you, TLC. Maybe different data. You're coming from the termination. It looks pretty similar. How many days back are you? Actually, you may not have your synthetics on there. Hold on. See these fibs on your 5-1? You don't have them printing on your large chart. That's one of the reasons they look different. So I have synthetic fibs on my chart. You can see the 5-1 fibs. You can see the 21-3 fibs. And they both print over here, which gives me a very different look. You don't have those on there. The first check is go to data series and make sure that tick replay is clicked. But that's the first difference that I see is you don't have synthetics on there. Practicing short trades. That's a long trade, silly. Roku, isn't that going up? That's a long trade. Short trades are the other way. Now, maybe you mean quick trades. So you came in here, termination, momentum, pull back to the correction point, go up. There was no resistance here. This is the one thing, is that divergence didn't even print till down here. So maybe quick profits. And then when it comes back to the mid-band, you come back in, and then you get out at resistance. And then you come back in because the momentum never changed, and off it goes. Yeah, I do. Ticked out of TLC. That's what gives you the synthetics. That's what pulls it over from other time frames. But Roku, this is just kind of a little different way of what you're doing always, right? That's odds favorable momentum and everything's screaming. And you're just capitalizing on the bounce points to go with direction and momentum. I love it. And that mid-band's not even inside of triggers. But notice that it hit the synthetics. It hit the synthetics. It hit the synthetics. Boom, 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 boom. This is why split triggers can create problems for people. It hit the synthetics almost every time. Good stuff, Roku. I like it. And then check it out, guys. It just never went. It just never went. And now at resistance. Miss Cindy, gap theory. Large triggers are a full bar away when we hit resistance. The gap theory says that price may close the gap back to these triggers. It becomes even more likely, guys, because, whoops, it's a bad bottom. It's not a termination that created that reversal. We'll see if it happens. Gap theory. Price accelerates away from the large triggers, hits an area. When the large triggers are, in this case, below the reversal bar marker, price loves to close back to that gap. So if you're thinking to yourself, odds favorable momentum, I can't wait to go long at the mid-band, you might want to respect that gap theory. Does everybody see it? And sometimes, not always, from a bad bottom, you'll find that what happens after that gap is closed is that they decide to go to that next key Fibonacci area. It's never guaranteed, but at least I know my first spot for trouble. Good stuff. How we doing? Quiet class today. You guys just all gearing up for Cinco de Mayo? Go buy some Coronas. That is a hallmark holiday, isn't it? Maybe they celebrate it more in Texas.